The world's second largest economy is out with their latest GDP figure, and Gino Tani joins me in the studio for this story on China and more. So what can you tell us right now?
Well, there was a time, remember, when the country boasted double-digit growth,
yes,
and that was kind of like the normal there, but things may be different now. Analysts at China's National Bureau of Statistics have released the country's second quarter data. It shows a single-digit growth, albeit the economy remains steady. Gross domestic product in the April to June period was 7%, meeting the government's target. There was no increase from the previous quarter. Analysts say housing prices kept falling in many cities, mainly in rural areas, and real estate-related investment and production was sluggish. However, the trade surplus expanded due to a fall in imports. Sheng Laiyun is a spokesperson for the Statistics Bureau. He says China's economy is generally stable and moving in a good direction.
The
numbers are improving. We can see positive moves in the domestic economy. But the environment in and outside China is still uncertain. The global economy is not recovering fast. So to cope with these factors, we have to make firm policy.
Officials in Beijing now say they're shifting their focus to the quality of expansion rather than its speed. They refer to this policy as the new normal. They set their annual growth target for this year to around 7%. For more on this subject, Ramin Meligard spoke to Peter Morgan. He's the senior consultant for research at the Asian Development Bank Institute and a specialist on China's economy. He started by giving us his view on how Chinese leaders see these figures.
I think they have to be slightly relieved. The numbers did come in slightly above expectations. They hung in at the 7% level, which is the target of about 7%. There are some signs that things could actually pick up a little bit in the second half of this year. I think they should be concerned, though, the fact that the weakness of imports was one of the factors behind the growth holding up. And I think the domestic demand actually has been a bit on the sluggish side, and that should be of some concern to them.
Right. I mean, and also the level of the investment and consumption can either be an engine or brake. How do you think those are playing into the numbers?
Both of those have tended to be weakening recently, so that they've definitely been operating as brakes rather than as engines at this point. And I think that particularly investment has been impacted by things like weakness in the real estate market, the weakness of exports, so that that's still a source of some concern.
Now, China's cut rates 4 times since November. How effective, really, do you think these cuts have been, or if they need to make any more?
They are reasonably effective. We've seen some increase recently in the growth rates of money supply and bank loans, and those are lead indicators for some modest pickup of growth in the second half of this year. But I think they probably need to take out a bit more insurance in terms of further rate cuts, further cuts in the reserve ratio, that kind of thing.
Right. And also, they're facing a lot of challenges, production overcapacity, also weak consumption, sluggish investment in real estate. Do you think they'll be able to maintain or retain this 7% target?
I think for this year, the 7% target is achievable. If anything, the first half was going to be a bit weaker than the second half. As I mentioned, we are seeing some signs of pickup in things like money and bank loan growth, and that should help support growth in the second half of this year, along with possible further easing measures. So I'm reasonably confident that the growth target can be achieved.
What would be the biggest risk then in attaining some of these targets?
I think the main risk is probably domestic rather than external at this point. Exports have been weak, but if anything, the global economy might be picking up a little bit from here. But things like the real estate market, the effects of the big correction in the stock market, those are still working through the system. And I think particularly we could see for example, increases in non-performing loans as a result of slow growth and some of the other problems in the financial sector.